Good morning, everybody. It's Chris Robinson Ag Marketing with today's pre-opening grain and livestock comments. I covered a lot of technicals over the weekend on the weekly wrap. All the levels that I'm looking at here. If you're not getting that, robinsonagmarketing.com, or call me directly, email me directly. I'll send you a copy. Overnight, we've got higher prices in crude oil. The war is not officially over, right? And we hit $100 last night in crude oil. We opened up at 98, hit 100. We're trading 98 as I'm talking to you, up 255. So the market's pricing in continued worries about Iran, and that's what we've been trading really for the past 70 days. If we ever got back to trading fundamentals, the world is pretty well supplied with grain. We've seen China with their soybean, they're on average, right? They're not below average, they're at average, but they're not higher than average. And so it's kind of good news, bad news. They haven't completely walked away, but they're also, taking a lot of grain from South America. And again, if we ever get back to trading fundamentals as opposed to what crude oil price is, we may be looking at a different market, right? Because the market's well supplied. At the end of the day, we're looking at crude oils, and how long is this going to continue? Nobody knows. It has given us a good opportunity, though. D's corn back up to $5, $4.98 a quarter. The low of the year were $4.40, $4.45. Novi beans hitting $12.01 and a quarter. That's a new high for the move. Last time we hit $12, then backed off. This time we're at $12.01. And all I can say about this is if you are selling into this rally, all the more reason to make sure that you re-own with cheap calls and hold them. The calls, they can be worth a lot if we can continue to go higher. But it's the only way to stay in the game after making a good cash sale. So take a look at that. If you're not at least 35% sold on beans, get there. This is a great opportunity. We started the year at $10.55. So, you've got a $1.50 head start compared to where we were. We were worried about sub $10 beans in December. We were worried about sub $4.25 corn in December. And we're sitting here at $5. I understand it's not enough. I understand there's a lot more problems out there, but the fact that we're sitting here on May 11th is a gift. People keep saying, is this 2012? I don't know. I'm not a weather guru. 2012, we did not make our lows until June, right? That June report. So here it is, May. So 6 weeks from now. And if actually you go back and look at those charts from 2012, we trended lower all the way into June. It wasn't until we got the acres report and we got the heat that things took off. So there's still a lot of uncertainty. I think the best way to play it is to defend what you can. D's corn, we're trading at $5, trying to at least get $4.70, $4.75 hedged with puts. Novi beans, they're now at $12, right? We had a lot of 11.20s, 11.30s. Do you want to bump it up to 11.50, 11.60? That might not be a bad idea. We've got the USDA tomorrow, and we have the Chinese meeting on the 14th and 15th. On Wednesday, which is the 13th, Treasury Secretary Besant is going to go there early and try and iron out some deals. Is it going to move new crop beans? I don't know. Nobody knows. I hope they do. The managed money is bet long, guys. That's the big what if. They added to the open interest last week. I had it in the letter. The commitment traders shows that they actually bought more corn and beans. And the issue there is if we get a bearish news deal out of China or the USDA, I don't think the USDA I think the China meeting's a bigger risk than the USDA. But if we were to get some negative stuff, all these people that just bought beans, they're the same people that, they spend all day chasing Bitcoin or chasing GameStop, or they're just chasing the next move. They won't stick around. And we've seen that twice already in corn. When we rallied up in the first week of March, you had a bunch of people get long on corn, and then we broke 40 cents. A big part of that 40-cent break in corn was the funds dropped 60,000 contracts. So I know it's annoying. I know it's hard to wrap your head around, but we don't have a fundamental issue in corn. We don't have a weather issue yet in corn or beans. What we have is uncertainty about crude oil prices, and you have money chasing commodities as a spec/hedge against inflation. Okay, so that's it. And we're going to see if cattle is going to continue to move higher. We do have the displacement between, cash is higher and feeders are lower. I don't want to be in another situation like we had in November where we dropped $85 in feeders and $40 in fats, and guys weren't properly hedged. If you are hedging in, make sure that you've got something on there, just in case that market falls away. We're watching the lean hogs as well. The deferred months look like they're trying to make a stand there. We had a pretty good 50 or 60% retracement of the big rally out there. Guys are trying to step in there and buy that dip, buy that technical level. We'll see if that holds. If it doesn't, you still need to have some sort of cheap protection under those unpriced animals. All right, guys, this is Chris, 312-638-8868. If you're looking for help, give me a call, robinsonagmarketing.com. If you're not getting my letter, sign up for it or email me. And love to hear from you. Take care.